Okay, welcome back, everybody. Today is Wednesday. Today we're going to wrap up chapter 5 by continuing talking about the financial statements for the governmental type funds. And then let's see where we are here. I'm sorry, I don't have any turned on up here. Let's see here. All right, there we go. All right, so let's see where we are. Today's the 19th, so we're in the week here, February 17th to the 23rd. So we're wrapping up chapter 5 today and going to get into chapter 6, dealing with proprietary type funds. So let's go ahead and get in here. Make sure it's recording. Okay, that's good. Okay, so on Monday we left off. We were looking at the Village of Riverside balance sheet for the governmental funds, right? And if we recall, these balance sheet, this balance sheet and the statement of revenues expenditures that we're going to go over it's corresponding to chapters 4 and 5 entries that we've went over. So some of these numbers will stick out to us as we go through it. My main point here is just to get familiar with these financial statements again, with the way they look and the layout of them. We'll get into more of building them later on in the semester a little more too. But main thing here is we're pulling this directly off of our closing entries, right? Not in the trial balance and the closing entries. So let's just go through here again. Just point out some of the key points to this statement here. So once again, at the top we see it's labeled a lot like just your normal balance sheet. You see it's an as of date, tells you what it is. Balance sheet, governmental funds as of December 31st, 2020. Obviously, we know it starts with assets, deferred outflows, then liabilities, deferred inflows, and then eventually fund balance, and then the reconciliation at the bottom of it with the total fund balance, the change and all that. We know that we're going to list all major funds, and then we'll have a separate column for non-major funds. We know that the determining criteria for that is the 10-5% rule, with all assets, liabilities, and all that good stuff, what that formula is that we went over from chapter 2. That's going to determine whether it's a major fund or a non-major fund. General fund is always going to be a major fund. That's why we see it listed here once again on the left side. So we're always going to see a general fund there. And then next, as we can see, this Village of Riverside actually had no non-major funds, so we don't have one. I also want to point out that the capital projects that we went over for the capital projects fund is not presented here because it was closed, because we finished that project. We mentioned that on Monday as well, but that's why it's not here. If the project was still underway, it would have its own column here. So we can see here on the Village of Riverside, they have the general fund, always major, and then obviously all these other funds are major funds here, so they got their own column. We can see that the top or the far right column is always going to be a total governmental funds, so we can sum them from left to right for the assets for each one of them. So that total governmental funds for the $728,000, that is just the total cash that the total governmental funds. But then you can see it's itemized between the general motor fuel tax and so on and so forth of how much of that money belongs to each one of the funds. Same thing for the rest of the assets. Just the different assets going across in each relative fund. Then you can see that we'll have a total assets, which is obviously summed going down for each fund. So we can see the general fund has total assets of $1,066,290. If we go over the total governmental fund, same thing, $1.784,290, and obviously that's just the sum from left to right. Liabilities, same thing for the assets, just a different element, right? So sums going down for each fund, and then some going across for the total governments. At this point, then we'll get into the deferred inflows of resources. In this case, the deferred inflow of resources is going to be the property taxes accounted for in the general fund. It's deferred because we're expecting to get it after the 60 days after the year end, so it's going to be deferred. And if you remember, this is the 40,000 we actually moved from revenue to deferred revenue earlier in chapter 4. From that point, we'll get into fund balance. Obviously, the total fund balance is going to be the difference between your assets, your inflows, or deferred outflows, and your liabilities, deferred inflows. But the fund balance has to be listed into the 5 categories, right? It's either going to be non-spendable or the spendable. Spendable has 4 categories. We start with the highest constraint when we start listing fund balances. That's why we see non-spendable first. Non-spendable, it means that it's either prepaids or inventory, right, or the corpus of the permanent fund. In this case, we can see the whole fund balance that is non-spendable is the corpus of that $300,000 donation, that old boy that donated because he was all upset over the cemetery being all messed up. So that's why his is in there, because can't spend it, so it's non-spendable. Next, restricted. This is going to be coming from outside source like bond covenants and stuff of that source. So only thing we have restricted here for road repair and maintenance is $237,500, and then we also have some restricted for public works in there in the general fund. So for committed stuff, we have committed to capital projects of $100,000. Next, assigned, and remember, committed is at the highest level within the government, putting the constraints. Next, assigned. Assigned funds could be stuff that's appropriated or not appropriated. I'm sorry, encumbered and stuff of that sort. Remember, assigned is going to be the last level of constraints that we can have for the debt service, capital projects, permanent, and remember, special revenue has to be either committed or restricted, so it doesn't happen there. And remember, the unassigned fund balance, positive fund balance, can only be in the general fund. So we see all this. We're pretty solid with this. We spent some time with this on chapter 2. I just want to bring it back because now we've went through all these funds, more of an intimate approach or more pervasive approach into them. So we get that, right? We can kind of remember where some of these items came, because we're just plugging these directly off that closing or final balance and stuff. So like I said, we'll get into that later in the semester as we go on. Like I said, I just want us to really become familiar with the format and just know where it goes. Just remember, journal entries, attention to detail is what's going to populate accurate financial statements. Okay. So that's the balance sheet. Not bad, right? Shows your assets, deferred outflows, liabilities, deferred inflows, and the deferred inflows of resources, and then I already said that, and then your fund balance. Then obviously at the end we know it gives us total fund balance, right? Which is just the makeup of whatever it is in here. It itemizes it in the different constraints, and then total liabilities, deferred inflows, and fund balance right here. So it just breaks it down, everything. I think we're pretty good on the balance sheet, right? Not bad. Just remember that the elements, what the elements are. Remember, we have to put the fund balances in the relative category. Make sure it's in the relative fund, and just remember the major, non-major rule if they get their own column. And there has to be a total governmental fund on the end. Not bad, right? That's not bad. Okay, next, let's look at the statement of revenues, expenditures, and changes in fund balances. Okay, so once again, let's just start at the top here. Village of Riverside, statement of revenues, expenditures, and changes in fund balances. Governmental funds for the year ended December 31st, 2020. Notice it's for the year ended instead of as the balance sheet. The difference, the reason why the titles is different is because this is for a period of time for the year ended. The as of the balance sheet date is just a point in time, right? That's why they're labeled different. As we can see here, this obviously is our statement of revenues, expenditures, and changes in fund balance for the governmental funds. First thing I want to point out is we start with revenues, right? And then we get to our expenditures next. Revenues are by source, right? We want to know where the money is coming from, so we can see we can see how the source of property taxes is a source, motor fuel taxes, sales tax, interest penalty, so on and so forth. So revenues by source. You can see the funds listed directly correlate, or they're directly parallel, or the same. They're identical to what was on the balance sheet, obviously, because this is the comparative statement here. So we have the same funds here. General funds always major. Let's see here. So pretty simple here. I mean, as you can see here, property taxes, if you remember, they're levied in the general fund. That's why we're seeing that original levy of the 3.178,800. If you recall from the motor fuel tax, 650 was the revenue. Like I said, this is all relative to the journal entries from chapters 4 and 5 that made up these statements. So we've talked in depth about these entries, and now we're just plugging the sources of revenue. So like in the general fund, when we levied property taxes, that revenue, we know we took 40,000 of it out, right, and put it as deferred revenue, and that's on our balance sheet. Remember, we showed that deferred inflows of resources. Well, this was the remainder that we had as revenue for as of this period. Remember, because the rest of it was available, but that 40,000 fell outside of it, so it was on deferred inflows. But we recognized this much of it. So when we levied that property tax of taxes receivable, set up our allowance for uncollectible property taxes, and then credited revenue, that's the amount that we credited, and it was from the general fund when we levied that, right? So that's why it's being put in the general fund right here. Same thing with when we did the entries in the motor fuel tax. It ended up the ending revenue for that period was this. We plug it there, right? And like I said, if once you get into industry or practice, you're going to have automated systems that prepare your statements for you. You'll make journal entries and make adjustments, and you can play around with it and pull up your screen. And you'll see, like if you debit cash, for instance, of $50, and then credit sales, then when you go in and pull back up your balance sheet, then cash is going to be 50,000 higher in the control account than it was, so it automatically populates it. That's why I always stress the importance of knowing journal entries and being detailed about them. So, like, once again, it starts with revenues, right? Listed them by source and for the relative funds. If you recall, remember the intergovernmental revenue for the fire station. Remember we had 600,000 that we counted as intergovernmental revenue. So that's why we counted it there. So pretty much it's simple. Revenues, list them by source going down, then just place them which fund they belong in, right? Pretty simple. And then you have your sum of your total revenues, obviously. And you also pay attention, you have your total governmental funds column at the end, which is obviously summed from left to right. And we can see general fund only has that one for total governmental for property taxes, because we know property taxes is dealt in the general fund. So we can see sum to the right will give our total columns, and going down will give us total revenues. So we know the way these things operate, right? So that's the first half of it. It starts with revenues. Obviously, the next is expenditures. Obviously, it tells us what comes next: statement of revenues, expenditures. So follow the order of operation that it gives you. All right, obviously next we move on to expenditures. So remember, expenditures there's three different categories by character. What are they? The character of the expenditures. It's either going to be current, remember, or if we can spend money, expenditures, right? We're talking about expenditures. There's three different characters. We can either spend stuff on current stuff, which is going to be like your general government, public safety, public works, current activities, right? Or we could be paying debt, right? So debt service, right? Current, it's going to either be current, debt service, and if it's debt service, then it has to be only what two things we're going to account for: principal or interest. So we can see that with the debt service, and then next capital outlay, right? Spending for the future periods. If you recall, debt service is servicing old debt from previous periods. Capital outlay is buying buildings and infrastructure to benefit future periods, and current outlays is just current operations stuff, right? So expenditures, first thing, there's three things by character, right? What are they?
They are well, the debt, and then the capital outlay,
right,
and then current,
right. So, and within each character, it's by function, right? So it's by character, and then each character by function. So we can see the character of current has got general government spending, public safety, public works, health and welfare, cemetery, parks, recreation, just stuff that keeps stuff currently going, the day-to-day stuff, right? So think of current expenses, right? Then obviously debt service, the two functions there is principal and interest, and then capital outlay, obviously whatever that function would be, whether it be a bridge or whatever it would be. So not bad, right? So expenditures are like three different characters: current, debt service, capital outlay, and within each character there's a function for what is being expended. And why does the government care about the sources of revenues being stated by source, and revenues being stated by source, and expenditures by character and function? Why are they concerned about that again?
So they can go back and analyze it.
Right, they want to know where the money's coming from, and they want to know where the money's going. And also because of the concept of what does governments have to be? It starts with an A. Accountable, because they're doing non-exchange transactions, and remember stuff, just taxing stuff that is mandatory upon us. So we have a right to know what they're doing it for. So they have to be accountable, and being accountable means they have to show their sources. But it's also good for managerial purposes of the government to know what good sources of income are, what bad sources are. So like I said, there's your expenditures and your characters and your functions. Next, you can see same thing here. We still have our total column. We're still just summing from left to right and down. So we have our total expenditures here, right? So if you recall back to our revenues, we had our total revenues, then we have expenditures, then our total expenditures. The next line we're going to see is excess or deficiency of revenues over expenditures. So in this case, we had an excess of revenues over expenditures of $1,059,090. In this right here, we have a deficiency of revenues over expenditures of $216,000. So it makes sense, right? So if it's in parentheses, it's a deficiency, obviously, because it's telling you. So that's why it's explained like that. But they want to give you like more of a detailed breakdown, so that way we know where we are just from revenues and expenditures. We have kind of like out of your income statements for your for-profit, you can either have your detailed income statement. I'm probably not using the right name, or just your single statement where you can lump your revenues together and you can lump your expenses together, right? Or you can like put find your operating income, like gross profit and stuff like that. So you can have a detailed breakdown. These right here, they're bunching the revenues and expenditures together, but they still want to tell you whether you are in an excess or deficiency over revenues and expenditures. They want to give you a clean break here to see where we're at this point of the statement, right? So just be familiar with it. So we have our revenues, expenditures, and we obviously have the total of each of those, and then they're going to tell us whether we're in excess or deficiency here before we get to the other financing sources and uses. Okay, what is other financing sources and uses? Remember, that's a budgetary account, right? When we're setting the budget, what are other financing sources and uses?
So sources would be transfers in,
right,
and long-term debt.
When we issue debt. Yeah. Right, so debt and transfers in would be sources, and uses would be what?
Transfers out.
Right, that's it. So that's all we're going to expect to see here, right? So let's see here. Let's take a look at what items we have here for the Village of Riverside. We have proceeds of bonds, right? Remember, we were working on that. What was that? What's that fund there? I forgot what that last fund was. cemetery or whatever it was. We borrowed $12 million in bonds. Remember, I can't tell which fund this was in. But anyways, other financing source. So we issued debt, right, for the bonds. If you recall, it was 1.2 million. Remember, we had a premium on the bonds of 12,000. Remember, transfers in of 200,000, transfers out of the general fund out of here, and out of the one here. And this would have to be probably our capital projects fund. And one thing I do want to point out that I didn't. That's exactly what fund it is. It's capital projects. It's still going to be listed on your statement of revenues, expenditures, and changes in fund balance. I'm glad I went blank on what fund that was because it reminded me to tell you that. So even though it was not on the balance sheet, right, because the project was finished, so there's no position within a project still going, right, because the balance sheet recognizes the point in time. It's the financial position of a company or a government, right? So if the project's finished, there's no financial position to be accounted for with that project, so it's no longer on that balance sheet. But that activity, the expenditures and the revenues of it are still having to be accounted for that period, so it still has to be shown in here, right? And so that's why we still have the fire station additional capital projects, right? And the way I knew that was a capital projects fund is because look at the transfers out. What are the transfers out right here, if you recall? What do we do in capital projects funds? What do we transfer out of that? Remember, we sent it to the debt service fund. Debt service funds get some money from the general fund usually, but it could come from capital projects fund. What made up this number right here from the capital projects fund?
It would be the interests.
Yep.
And then the premium on bonds.
And
there's another one.
I'll give you the RE. It's 2 words. No, but it's same almost. It's like retained earnings, residual equity, right? And in this case, I believe it was just a residual equity of 35,000 and some change plus the premium is what accounted for this. I believe. I don't believe we had any accrued interest, but you're right. Accrued interest is one of the things that could be transferred from the capital project to the debt service. We can see transfers in. Obviously, this is debt service fund. We know that because we're transferring money in, right? So pretty simple, right? Other financing sources and uses, which can be transfers in and out, and proceeds of bonds or issuing debt, right? That way we know. So see why it's important to know what elements belong in each source, right? Same as expenditures, to know the 3 characters. It's going to be current, debt service, or capital outlay, because that way you know what the statement's going to look like. Then you just need to know what items are in there, and the items could change under current. This year we could have a miscellaneous account and a public works. Next year we might not. So if you know the overall framework and format, you already know what the overall view of these things are going to look like. So let's get in here. We got to the bottom. We're good on the other financing sources uses, right? Same thing, same. Everything operates the same. The statements operate the same. It's just different sections. We're building them the same. So it just belongs. The transfers out need to be stated in here. If they're going in, the relative funds, right? They're plugged. And then one more line here, they tell us total other financing sources and uses. For the general fund, we use $800,000 or transferred it. 0 here, 252. So we're just summing them up again, right? And then notice we have our total column. Simple, right? Not bad. And the last thing we have, remember special items? So what is a special item?
Something that's out of the ordinary,
right,
for a government to get.
Right, but it's still what?
It still has to do with
the government. It's still within their control. It has to do within the government, but it's out of the ordinary course of business, but it's still within control, right? And as we can see here, proceeds from the sale of land. That's going to be your most common form of a special item, right? Because we're not in the business of selling. We're not a real estate agency, right? We're not trying to sell property, right? We're a government. So proceeds from land, that's the only special item here. If you recall, remember we sold the land for $300,000, remember? And that was a revenue, right? So that's going to be the proceeds of land, and it was accounted for in the general fund, so that's why it's plugged right here. So you kind of see where things are being plugged from your entries. It's just so important to make the correct entries and itemize them correctly and label them. Because then if you have that, like I said, and then you know the format of these, No, I mean, you can just plug them right on in, you know what I mean? And then just do basic math and your basic adding and subtracting, and you're good as long as you know the format. So here's a special item. Net changes in fund balance. Obviously, if we go through all these things and add each one of those relative points, revenues less that, and then take the point breaks that they've given us, the excess deficiency of revenue over expenditures, you take this, subtract this out, add this back, you'll get your 550, right? Obviously, excess here is 25. There is nothing here, no special items, so it's still 25. So that's why they're giving you these breaks right here, so it makes it easier for the net change in fund balance, right? So we go through each one of those points and find out what the net change is, and we sum it going across to the total column. Same thing. Order of operation never changes. We're just moving farther down the statement. Then we have fund balances at the beginning of the period, right? And then at the end, obviously, fund balances at the ending, which is just your net change in fund balance plus the beginning fund balance gives you change the ending fund balance. And that is so we can reconcile it, right? That way it matches. We see the change. We know what it was in the net change at the period, the change, what it was in the beginning, and what it is at the end. So it's reconciled. And remember, the bottom portion of these statements is like your statement of retained earnings a lot of time. You have your beginning, what your changes for the periods, and then your ending. Something like that. The format's similar to it. So pretty good with the statement of revenues and expenditures and changes in fund balances. Not bad, right? Balance sheet, gotta have your major columns, stuff like that, changes in fund balance, your spendable, non-spendable, all that. Statement of revenues, easy. It's got to have the same governmental funds that was on the balance sheet. Start by revenues. Revenues are by source. Next is expenditures. Expenditures have three characters: current, debt service, or capital outlay. Within each of those, we have functions in which it is. From there, other financing sources and uses. We know they're transfers in, proceeds of debt, or transfers out. Special items is going to be next. Those are usually proceeds of land, but it's out of the ordinary course of business, but still within the scope of the government, or still within the control of the government. And then from there, we have the net change beginning, ending with the reconcile. Not bad, right? And that's the only statements we have for governmental funds, other than when we reconcile them to the accrual basis to go to government-wide, right? Because remember, these 5 governmental funds operate on what type of accounting? Modified accrual, and they're focused on what type of measurement focus? Current financial, right? So that we have to obviously we have to reconcile them, or we have to translate them to accrual, and we'll get through that later. But for now, we know these 5 governmental funds operate on the accrual, and we know what statements that accompany them. Right? We're pretty solid on governmental funds now. That's all I have for chapter 5. Are there any questions on anything? Does the statements seem to make a little more sense than they did the other day? I know we haven't. I'm going to get deeper into it as the semester goes, but for now, I just want us to be familiar with the statements, because we're about to completely switch gears and go to proprietary funds. And it's now. So we're going to go from the modified accrual, which we've been on pretty much the entire semester so far, other than the introduction from chapter 2. And now we're going to jump back over to what you're used to seeing in proprietary funds. There's still some slight differences than what you see in your for-profit sector, but overall you're going to see some more similarities in that. So we're good on governmental funds for now. Awesome. And also I want to just to point out too that on these here, just one thing I should have showed while I had the other one up, but it's not that big of a deal. The total fund balance, this 1,423,990 should match to that on the statement of revenues and other stuff, which we already seen that in chapter 2. I just want to point that out, that those items should match. Hard to believe we're already getting into chapter 6 in here. Okay, next. Chapter 6, proprietary funds. Okay. So before we get into it, how many proprietary funds are there within the governmental unit?
Is it two?
There's two. Can you recall what the names of them are?
Is it? Is one of them the like intergovernment service?
Right, you're close. Internal Service Fund. Yep. So you're right. And what does that fund do? It primarily does what?
It provides services inside the government.
Right. When dealing with that, remember when we're dealing with government-wide statements? I know we haven't really talked much on it, but I just want to throw it out there right now. We have governmental activities and business-like activities, right? Which activity is Internal Service Fund going to fall under? Even though it's proprietary, what's it going to fall under?
Government.
Why?
Because it services the government.
Right, because its primary function is to service the government, right? And it's usually on a cost reimbursement basis, usually. So then the other fund, what would the other fund be? Do you recall that name?
Well, it'd be the one that services people outside the government.
Right.
I don't know the name.
It's enterprise fund is what it would be. So it's like an enterprise. Think of like a business as an enterprise, right? So if we're servicing outside, we're thinking that it's an enterprise. If it's for the government on the inside, it's internal service, right? So internal service fund is for the internal servicing of the government on a cost reimbursement basis. It is a governmental activity when we get later on down the road when we get into preparing government-wide statements. The other proprietary fund is the enterprise fund, and as you said, it services primarily those outside of like the citizens and stuff like that. Both of them do operate on the accrual basis of accounting, so that's nice. They both operate on the same. The only difference really that a lot of people tend to struggle with is internal service on the government-wide level is governmental activities, enterprise is business type activities, but they're both proprietary. Okay, so let's just get into this chapter a little bit. So some of the objectives for chapter 6, we want to apply the accrual basis of accounting and the recording of typical transactions of internal service and enterprise funds. We want to prepare the fund basis financial statements for proprietary funds. Identify when an activity is required to be reported as an enterprise fund. And then we want to contrast the statements of cash flows prepared under FASB and GASB, because if you recall, there are some similarities and some differences between the two that we mentioned a little earlier in the semester. So let's just do a little review of proprietary funds. Proprietary funds use the accrual basis of accounting, right? So they're doing the economic resource measurement focus. So within proprietary funds, since they use the accrual basis of accounting, we want to match revenues with expenses, right? And we're also going to account for depreciation. So this sounds familiar, right, from intermediate. We want to match revenues with expenses, and we also want to account for depreciation. And the emphasis is on income measurement. So same thing. We're worried about net income, right? We want to worry about what income is. Typically do not record budgets or encumbrances within proprietary type funds. That's usually on governmental funds. What two governmental funds record budgets usually?
It would be the general,
right,
and the special revenue.
Right. Awesome. So proprietary funds use the accrual basis of accounting, economic resource measurement focus, match revenues with expenses. We're accounting for depreciation, and we're emphasizing income measurement. Not worried about budgets though. So once again, it uses the economic resource measurement focus. So meaning we are going to report capital asset acquisitions and debt service activities within the proprietary funds. So what that means, report capital acquisitions and debt service activities, just means we account for long-term assets and long-term liabilities. It's pretty much what the economic resource measurement focus is. We're measuring stuff for the long term and the short term. Construction of enterprise fund capital assets is reported in proprietary funds, not in the capital project funds. So if you remember when we were talking about capital projects funds, we said if the water utility fund would do an addition on the building, they account for that in that proprietary fund, not within a capital projects fund, right? So that's what we're talking about here. They're going to account for that within that fund. We don't need a capital projects fund. Payments for interest and principal are going to be made from the proprietary fund, not a debt service fund, right? So it's nice. We don't have to worry about, okay, your fund is not this function. We need to send money over here so that debt service can pay it. We're just going to pay it straight out of this, right? So it's kind of nice. It takes a lot of the headache out of worrying about what fund has to deal with what, right? So we're just going to deal with everything out of this one. Statement of net position includes both current and long-term assets and liabilities. So statement of net position is going to be one of these statements that we need here. So statement of net position includes both current and long-term assets and liabilities. Proprietary fund closing entries. Gotta love these closing entries. Can't get away from them, unfortunately. So obviously we want to close all revenue and expense type accounts, right? As well as transfers. And notice where we're closing them again to net position, right? So everything's going to be closed in that position, no different than governmental funds. It was closed in that position. It's kind of like retained earnings, right? Net income is closed to retained earnings in your for-profit sector. And governmental, everything's closed in that position. So once again, all revenue expense type accounts as well as transfers are closed in that position. Pretty simple, right? Because those are all operational activities. Remember, if you recall, net position is reported within 3 categories. We have net investment in capital assets, restricted if needed, and unrestricted for the remainder. Let's just back up here. Net investment in capital assets. So we can see here the formula is given to us here. If you recall, we have our capital assets, right, the cost. And we already know usually when we have capital assets, we usually have a contra account for accumulated depreciation, right? That's going to lower that to book value, right? So it'd be cost less accumulated depreciation gives us book value, right? Well, if for governmental purposes, for the net position, for net investment in capital assets, obviously we have capital assets cost minus accumulated depreciation, and then minus the outstanding balance of debt required to incur to purchase those capital assets, right? So if you remember, if you recall from chapter 2, when we were building, we just showed the example of the statement of the statement of revenues and expenses and changes in net position or fund net position. If you recall, when we had that net investment in capital assets, we could see what it would give us. The statement would give us the actual capital asset, right? And it would either be net or it would have accumulated depreciation below it, right? So that would be, this part of the formula would be given, right? Because we would know that from looking at the top part of that statement, remember? And then if we went down to the lower part with the liabilities, we could see the long-term debt still outstanding. Usually that long-term debt from the bonds is going to be used for capital projects and stuff of that sort, or for capital assets. So we want to back that back out too, right? So that just, if you recall, do you remember that when we looked at that, we had those capital assets, and then I think on the example we gave us, it was net of accumulated depreciation. So it was capital assets net. So we had that number, then we just had to back that debt out, and that gave us net investment in capital assets. So just remember, capital assets, less accumulated depreciation, less the outstanding debt used to acquire that capital asset. So that's the net investment. Next, restricted if needed. So we know what restricted means. We just, there's covenants, stuff, we can't touch it. And then the unrestricted for the remainder. And the unrestricted is the plug, right? So if we know what if you recall, remember, we know what all of that position is when we look at that statement, because it's the difference between the revenues and expenses and the changes in it, right? So it's going to give us that total net position on it. And then from that point, we want to go in and just decipher what's net investment in capital assets, what's restricted, and then that'll give us what's unrestricted, right? So kind of the same thing. Think of this part of this sheet right here as the same thing on this balance sheet. Think of it as the same thing as the fund balance on the governmental one. Only thing is we have 3 categories to be concerned with instead of 5. Remember, in the 5 we had the non-spendable and the spendable categories. Well, in this one, for proprietary ones on the balance sheet, we just have 3 categories, and it's the net position. And just know it's the net investment in capital assets, restricted, unrestricted. It's really not bad. The only confusing part, I believe, is the net investment in capital assets. And it's just that lingering debt that's outstanding that is what that nuance is in that, right? So good on that. Net positions in three categories. We have to close all the operational accounts. Okay, the internal service funds. This is used for sales of service primarily to other departments within the government, and it's typically on a cost reimbursement basis. So you already told me this. The internal service fund is going to primarily service the own government, right? The purpose is to pull resources for more efficient operations. So obviously, if we have operations going on in the general fund, capital projects, all this other stuff, it can be a little confusing. Stuff can get out of control, right? But if we pull it all into one fund, the internal service fund, to service all other parts, it's easier to keep up. We can be much more efficient if it's all housed into one unit, right? It's often more efficient to have a single separate department responsible for these types of services and then charge their costs back to the other departments, right? So we'll deal with all the activity in it so it's more efficient, and then we'll just charge back the costs to see what that net cost will end up being, right? Some examples of internal service fund uses would be a motor pool, telecommunications, maintenance, purchasing supplies, or like a central store, or insurance or risk management. You know what a motor pool is? Motor pool is, we have one here at Bluefield State. We're just a pool of vehicles is all it is that the government owns. In this case, the state, or it's a state vehicle, but the Bluefield State owns them. They have a motor pool. So when any time teachers or administration needs to go to a conference or something, they can rent one of those things or just borrow one of those cars, and keep up with mileage and stuff. So that's what a motor pool is. So that's why it would fall under internal service, because they would have that motor pool to service different officials of the government if they needed a motor. Telecommunications, same thing. Maintenance, central source, insurance, all that. So it makes sense why that would be a central source for an internal service, right? So those are some examples we could expect to see. Self-insurance and risk management. Governments have a choice of using the general fund or an internal service fund for self-insurance activities. So it's their choice. Remember, general fund is just the general operations. So it makes sense why they could choose to have a choice whether they use an internal service fund or the general fund. Really, it's just strictly just their choice. If an ISF or internal service fund is chosen to be used, then the interfund premium is treated as a revenue to the internal service fund and as an expense or an expenditure to the other funds, provided that the amount paid is a reasonable amount calculated in a manner that will yield an amount roughly equal to the amount of the average long-term claims. Okay, so obviously we know insurance, we're dealing with claims, people being injured and stuff. And so pretty much if they use the internal service fund, obviously they're going to be shooting those premiums between funds. Same thing. Remember when we were talking about governmental funds, how if say the general fund paid a bill in advance and then $2,000 that it really belonged to an enterprise fund, they billed them. Same thing, that's what they're talking about, interfund premium being treated as a revenue to internal service fund because they're receiving it, remember, and then an expense or an expenditure for the general fund or whatever fund is incurring the expense or expenditure. Makes sense? So same thing, that's what that means. Interfund premiums treated the same as interfund billings and stuff from governmental stuff. Okay, now so we've discussed the internal service funds. We know that services the internal body of the government, internal unit. So now let's talk about the other type of proprietary fund. This is the enterprise funds. It says here it's used for sales of service primarily to others outside the government unit, such as the general public. So enterprise outside, internal service internal, right? It's going to be mandatory that the government use an enterprise fund if any of these three scenarios are liable. It's going to be mandatory if we have debt backed solely by fees and charges, right? So it would be mandatory if we have debt backed solely by fees and charges, meaning we're going to pay that debt back by charging fees and services, right? Obviously, the enterprise fund is a proprietary fund, and we want to make money on that because we're dealing with outside people, right? So it's for a for-profit basis, not a cost reimbursement. So if we have debt backed largely or solely by the fees and charges, it makes sense. We have to have an enterprise fund, right? We have to, because that's our means of producing that revenue by fees and service. or fees and charges. An enterprise fund would also be mandatory if it's legally required to charge fees that will recover the cost, including depreciation. So if we're trying to recover that cost, and we were legally required to do so, we have to have an internal service or an enterprise fund. I'm sorry, because that's our bread and butter. That's how we make money, right? Also mandatory if government policy of requiring cost recovery from fees. You see the little parallel between all these.
Yeah. The enterprise fund kind of has to be profitable on its own.
Right, it has to. But as far as if it's mandatory, if it's you see a routine or a little parallel between them. Debt backed by fees and charges. If we have to recover the cost, including depreciation, by charges and fees. If the government policy of requiring cost recovery from fees. So if it's the source, if what we're liable for, if we're responsible for covering that liability from fees, we have to have the enterprise fund. See the familiar or the likes between the different three mandatories. Okay, so that's if any of those three situations or scenarios exist, you have to have the enterprise fund. Okay, the use of the enterprise fund is permitted but not mandatory in these two situations. Okay, so the other three, if any of those scenarios are there, then we have to have it. And this one here, it's saying we're permitted to use it, but it's not mandatory. So obviously, if none of the three mandatory requirements are met, but management would like to see the activity's net cost after depreciation expense, use an enterprise fund. The implication is some services charging fees, recreational facilities, or civic centers can be handled in governmental or proprietary type funds, depending on the wishes of the government. Not bad, right? So once again, it could be handled in the general one for the governmental fund or within the other. So governmental funds are proprietary, right? But main thing here is if it's not mandatory, if governments wants to track the net cost after accounting for depreciation. So some common examples. This will be the last slide here. Then we'll go ahead and call it quits today. Some common examples of enterprise funds: water utilities, gas or electric utilities, airports, bus systems, swimming pools, golf courses, hospitals, parking garage, toll roads, public housing. We can see now after using all these how we pay fees for all that, how it would be accounted for in an enterprise fund, right? So those are some examples of the enterprise fund. So not bad. So that we'll stop on that today. This is not, we don't have but probably 11 more slides. We got halfway through the slides here. So that'll be our stopping point for today. Friday, we'll finish up these slides and then start getting into some intimate details like we did from chapters 4 and 5. We'll go through some stuff that they have, some entries and stuff we would expect to see within these type of proprietary funds. Everything's sounding pretty good so far. Everything making sense of what we went over. All right, cool. Just remember, everybody, that the Chapter 5 Connect assignments are going to be due this Sunday at 11:59 p.m. with the quiz, the smart book, and the homework. So just make sure to get those in. Like I said, that wraps up Chapter 5. We start Chapter 6. Chapter 5 homework due. And if you have any questions or concerns, just get in touch with me. I'll be more than happy to help. I appreciate everyone's time, and everyone have a good day. I'll see you on Friday.